You don't need to worry about a recession, but you might need to worry about inflation. At least that's according to Jerome Powell, who is the chairman at the Federal Reserve Bank, because we just got a brand new inflation report which says that inflation is not coming down and it's actually going up. Let me show you a little timeline, because in September 2024, the annual inflation rate was 2.4%. And everybody at the Federal Reserve Bank was celebrating because they said we have beaten inflation. Well, in October, the inflation rate went up to 2.6%. In November, the inflation rate went up again to 2.7%. In December, the inflation rate went up again to 2.9%. And we just got the January inflation report, which says that inflation went up again now to 3%, which means the prices of things are rising faster today than they were 5 months ago. So if you haven't gotten a raise, well, you're effectively becoming broker because your eggs are eating a bigger chunk of your paycheck. Now, this naturally has some people concerned about our economy. Are we going into a recession? And this is where Jerome Powell, just a couple of days ago, spoke in front of Congress and said that our economy is strong, it is healthy, and you don't have to worry about a recession, although inflation might still be a problem. But we do have a lot of new economic data that we just got in the last few days. So what I want to do in this video is go over three things. Number one, I want to go over what's happening with inflation. Then I want to go over what's happening in the economy. And then number three, I want to go over why are we seeing so much volatility in the stock market. So let me start by going over what's happening with inflation. And I haven't done this in a little while. So let me kind of break down what's been going on with inflation, because a lot of people say that the prices of eggs going up is inflation. Well, that's actually a byproduct of inflation. Inflation comes from the word inflate, and it comes from inflating the monetary supply, inflating how many dollars we have out there. And the inflation issues that we're seeing today still stem from what we saw in 2020 and 2021, where the United States government spent about $5 trillion of stimulus money that they didn't have. So for the government to spend this money that they didn't have, they had to borrow this $5 trillion. But who did they borrow this money from? Well, they borrowed this money from the Federal Reserve Bank, who is the central bank here in the United States. The only problem was the Federal Reserve Bank didn't have $5 trillion. So in order to loan $5 trillion to the United States government, the Federal Reserve Bank had to create this $5 trillion essentially out of thin air. They lent this money to the United States government, and then the government had all this money to spend on stimulus checks and unemployment checks and PPP loans and grants for businesses. So everybody felt rich, everybody had new money. But the question is, if the government can just give out all this free money, why do we have to pay taxes in the first place? Well, the problem is, if the government just gives out this free money, there is a consequence. And of course, the consequence is the prices of things going up, which is what many people call inflation today, which is why we saw all the inflation issues that we have seen over the last number of years. This is where the Federal Reserve Bank has been working to try to correct the problem, trying to correct the inflation problem. But they're not trying to correct it in the sense that you might think. They don't want the prices of things to come down. That is called deflation. That is not their goal. They have made that very apparent and very clear. They want the prices of things to rise less quickly. This is called disinflation. And the reason why is if you see the prices of things come down, well, that generally will mean that the economy is going into a recession, and nobody on Wall Street wants to see that. So the Federal Reserve Bank wants to see the prices of things rise less quickly. They say that they want a 2% inflation target, which means they want the prices of things to rise by around 2% a year. The only problem is we're not seeing that, and the prices of things are rising faster and faster as the inflation rate is going up. So now the question ultimately is, what is the Federal Reserve Bank going to do? Because between 2020 and 2022, it was a lot of stimulus, it was a lot of money printing, it was a lot of cutting of interest rates, which created the inflation problem. Then between 2022 and 2023, it was raising interest rates to kind of fight the inflation problem. Now the Federal Reserve Bank wants to do a couple of things. They want to stimulate the economy, but they also don't want to make inflation worse. And they're trying to figure out how to navigate that, especially with the Trump economic policies, which create a lot of uncertainty, including things like tax cuts, including things like tariffs, including the things that Doge is doing. And this is where the Federal Reserve Bank says that they're just going to hang tight. They don't want to cut interest rates right now because they don't know what's going to happen with tariffs. They don't know what's going to happen with inflation. They're seeing the inflation numbers go up. They're seeing that the economy is still strong. And that's why the Federal Reserve Bank says that they don't want to make any drastic decisions. Now, let's go into this inflation report. That way you understand what's going on, because the top 4 areas where we saw the most inflation over the last 12 months are at number 4, housing costs. At number 3, prescription drug prices. At number 2, airfare. And then at number 1, the leading cause of inflation, do you want to guess? It's auto insurance prices, because car insurance prices have jumped up almost 12% in just the last 12 months. Where have we seen negative inflation? Well, at number 4, it was furniture prices. Number 3, rental car prices. Number 2, electronics prices. And number 1, appliance prices. That had the biggest price drop. Now, as a little tip, because I bought a car recently, if you have car insurance, shop around, whether you're buying a new car or not, because what I learned is that if you shop around, you might be able to save a lot of money on car insurance just by, like that commercial, spending 15 minutes. So seriously, if you have car insurance, you might want to shop around, because you might be able to save a lot of money on car insurance. And if you want a tip, I partnered with a company called FinanceBuzz. They are an advertiser for Minority Mindset. They have an article that you can go through and see if you can save money on auto insurance. It just takes a couple minutes. I will link that for you down in the description if you want to see if and how much money you can save on your car insurance. Now, the thing that I also want you to understand about inflation before I go into the economy is that inflation disproportionately hurts some people more than others. It disproportionately hurts consumers, and it disproportionately hurts employees more than it hurts asset owners, because inflation actually benefits asset owners. I'll show you what I mean. Inflation makes consumption more expensive, because now when you go to Chipotle and you want to buy the extra guac, that extra guac becomes a lot more expensive because of inflation. So who does that hurt? Well, that hurts everybody who eats, and that's everybody. Rich people, middle class people, poor people. Inflation hurts consumption. But the other part of this is if you are just relying on your salary because you're an employee and you don't have other sources of income, well, what we have seen historically is that salaries generally do not keep up with inflation. I'll show you some numbers. Between 2020 to 2025, over the last 5 years, the prices of things have gone up by a reported 22%. This is the reported inflation numbers. Now, many people have felt much higher inflation, but I'm just going to stick with the reported numbers for this example. Over those same 5 years, the median household income in America is expected to have gone up by around 20%, which means the prices of things on average have gone up faster than people's salaries on average. You can start to see the problem. But there's one more piece to this puzzle. If we take a look at asset prices, more specifically the stock market, the S&P 500 has gone up by 80% over the last 5 years. What does that mean? Inflation has benefited stocks. Inflation has benefited real estate investors. But people that are just relying on their salary haven't seen their incomes rise fast enough to keep up with the inflation. That's where inflation is a problem. Inflation disproportionately hurts consumers. It disproportionately hurts employees, but it disproportionately benefits investors and asset owners. And you might say, well, Jaspreet, that's just the last 5 years. This is not something that's been going on for a long time. And that's completely not true. Inflation has been going on for a long time. You can take a look at the numbers for the last 50 years, and you're going to see the exact same trend. Inflation hurts employees, it hurts consumers, but it benefits asset owners, which is why you want to be an investor. And this is why it's so important for you to understand this, because the reality is the inflation is not going away. Remember, the Federal Reserve Bank says that they want 2% inflation. They don't say they want 0% inflation. They don't say they want negative 1% inflation. They want 2% inflation, because that 2% inflation is low enough that the average person doesn't notice the impact of inflation day to day. When inflation is at 5 or 6 or 7%, yeah, now you start to notice it, because well, your salary is probably not keeping up with the inflation. And so that's where they want inflation to be low enough that the average person doesn't notice it day to day. But this is where I want you to understand this. That way you can capitalize on this by becoming an investor. But before I go deeper into that, I'm going to talk about what's going on in the economy. Going into the economy, What we're seeing right now is that the economy is still growing, but it's not growing as fast. And this is where some people are concerned, but the Federal Reserve Bank says you have nothing to worry about. In 2023, the GDP, which is our economy, grew by 2.9%. In 2024, the GDP grew again, but this time at 2.8%, which was not as fast as 2023, and it was also not as fast as what people expected. Now remember, our economy is a measure of spending. And so when people measure how fast is our economy moving, they're taking a look at how much money are people spending. And part of the reason why people have to spend more money is because things are just more expensive. But the second part to this is people can also not always keep up with spending more money because the prices of things are rising faster than the incomes. If you have to spend more money on eggs, you have to spend more money on your car insurance, you have to spend more money on your rent, well, you have less money to go on a vacation. You have less money to buy a bag. You have less money to go out and buy whatever you want. And this is where some people are getting concerned that if inflation is going up, during a time where interest rates are still high, during a time where we have potential tariffs, during a time where we have all these layoffs in the government, could this mean that a recession is coming? And this is where Jerome Powell says no. Jerome Powell says that our economy is strong and we have nothing to worry about right now in the economy. But the inflation is what the problem is. This is what Jerome Powell said about inflation. He said, quote, I would say we're close to bringing inflation down, but we're not there yet on inflation, which is why we have to, quote, keep policy restrictive for now, which means Jerome Powell says that he wants to keep interest rates higher for longer because he doesn't know exactly what's going to happen with inflation, although he's still confident about what's going on in the economy. Now, what's interesting about this is over the last few days, Jerome Powell has been getting grilled by Congress, specifically about the economy, and he has said time and time again that the United States is not in a recession and the unemployment numbers are strong. Because right now we have a 4% unemployment number, which historically is still very good. But the interesting thing about this unemployment number, and this is not new, this has been going on for years, is a lot of people still feel like they are left out in the economy. A lot of people feel like, well, if unemployment is so low, why am I struggling to get a good job? Why am I struggling to find a good job? And this is where it's going to be really a time will tell type of thing, because if interest rates stay high and we start to see more and more companies start to force productivity, they start to force efficiency, well, we could see a change in how some of these businesses and economic numbers are coming out. But that's really a time will tell type of thing. Which brings us to what I talked about just a minute ago. What does this mean for you? Because obviously all of this leads to the importance of you becoming an investor, and we're seeing a lot of volatility in the stock market. Like when we got the news that inflation came in hotter than expected, the stock market fell, and then it started to go back up. When we got the news about tariffs, the stock market fell until tariffs got paused. So there's a lot of volatility happening in the stock market, not to mention, don't forget tariffs and AI. Because when we got the news about DeepSeek, we saw all the volatility in the stock market again. And this is one of the reasons why my team and I are actually talking about doing a workshop sometime soon about all the changes that are happening. If that's something you'd like to see, let me know down in the comments. But this is where there's a lot of volatility in the stock market. There's a few things that I want you to understand. Number one, the way you build wealth in this economic system is by becoming an investor. We know that inflation benefits investors. But number two, the thing you want to remember about this is that when you invest your money, you're not guaranteed to make money, and markets don't always go up. Recessions happen. We have seen 16 recessions over the last century. Recessions are a part of our economic system. They happen. When the next recession happens, we know it's going to happen, we just don't know when. A lot of people are going to panic, and a lot of people are going to freak out, and a lot of people are going to lose money. But what you need to remember is that recessions are a part of our economy. Those create great buying opportunities. So if your goal is to be an investor and you want to invest for the long term, well, this is still a good time. But what you have to remember is there's going to be volatility. We've seen the volatility. You just have to know what is the right strategy for you. Because for some of you, the right strategy is just going to be what I like to call ABB. Always be buying. You find something like, let's call it the S&P 500. That is a group of the 500 largest companies in the stock market. Now, you find a system where you invest every week, every 2 weeks, or every month, and you always be buying. You do it whether markets are up, whether markets are down, whether you have a Republican or Democrat in office, it doesn't matter. You keep buying because you believe in the long-term health of the economy. Now, I got to give you the disclaimer, which is I'm just a random guy on YouTube, okay? I'm not a financial advisor. I can't tell you what to do. I'm speaking from general purposes right now, just from my own experience. So just understand that and know that investing has risks and you will lose money at some point. The second part to this is you can be more of an active investor. This is where now you're looking for more niche opportunities, which is where you're looking at, well, what changes is Trump doing? How does that create an investment opportunity? How do all these changes in technology create an investment opportunity? How do all these changes with the Fed and monetary policy create economic or investment opportunities? This is you being more of an active investor. I'm not saying you should go out and become a trader, but I'm saying you have to understand the game. That way you know what is the right strategy for you. If you don't want to have to worry about all the stuff happening in the economy, you don't have to. You just ABB. If you want to be more involved, great. You got to find the right strategy for you. But this starts with you, number one, having the money to invest by not spending all of your money. I know it is difficult during a time where you still have high inflation and inflation numbers are going up. And for a lot of people, unfortunately, salaries are not growing fast enough with inflation. Now, despite that, you have to make the decision. What do you want to do? Are you going to complain about it or are you going to do something about it? Because you have to find a way to spend less than what you make if you ever want to build wealth. That's the reality. You might have to make some sacrifices. You might have to live in a smaller apartment. You might have to sell your car, go into a cheaper, smaller car, whatever you might have to do. But you need a way to find some extra money. Once you're not spending all of your money and you can actually breathe, now you can put money aside to invest. Once you have the money to invest, now you can start deciding what is the right investment strategy for you. It's all layers. You got to step your way up. You can't sprint before you walk. You can't walk before you crawl. And so this is where you just got to understand which part of the game are you in and then start working towards it. Now, we have a ton of resources that can help you. I have a bunch of free videos on my channel that you can watch to help hopefully get your money right. If you are an investor and you want to stay up to date on what's happening in the financial markets, again, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we're breaking down what's happening in the economy, the stock market, the housing market, crypto, and the global economy into a fun and witty and easy to read newsletter. It's completely free. So if you have not joined Market Briefs yet, well, we have hundreds of thousands of investors that are reading it and loving it every day. I would love for you to join. And if you don't love it, you can unsubscribe at any time because it's free. So if you want to join Market Briefs, I have that link for you down in the description below. But this is where, again, it all starts with you understanding what's happening, being smart with your money, putting money aside to invest, and then finding the right system and strategy for you. And then the final part, I gotta make sure I say this, is staying calm. Because emotions are the enemy of profits and people tend to freak out. Anytime you hear any financial news, you might hear the news that inflation is coming in hotter and people will think that the world is gonna end. People will say that, oh, there's a new AI competitor, they think the world is gonna end. People think that, oh, this is gonna happen with tariffs, oh, the world is gonna end. The media loves to sell you that, but the reality is you gotta be able to stay calm. That way you can find the opportunities and not get swayed by all the emotions so you can be a financially savvy investor, find the opportunities and find ways to build wealth, but that requires you to stay calm. And with that, I will see you on YouTube tomorrow.